Good evening, everybody. My name is Fergus Keenan. You heard a little bit about Adaptive from Chuck and from Mazzy and Mitra earlier. So we are a software development consultancy. I've been with Adaptive almost 4 years of its 5 years. As the guys said, we've just opened our office in New York. We have offices in London, Montreal, and Barcelona as well. I'm not a technical person, so I'm here today just to talk a little bit about trading technology in general, its evolution, and where we got to where we are today, and a little bit about where we might be going. It ties into a little bit about what was just spoken. So technology-enabled trading, so evolution of trading in a web-enabled world. Going a long way back, where did we start? So in Mesopotamia, people used these tokens as proof of trading, believe it or not. So these represented different commodities like sheep, wool, and various things. So some people might think some settlement systems haven't come too far from this, but this is what they used between about 10,000 and 3000 BC. Going in a little bit further to the 17th century and the development of the telescope. In trading terms, people used this new technology to gain an advantage with information. They used to go into hills over market towns and watch the ships coming in, and armed with the name of the ships and the listing of what was going to be in the cargo of the ship, they would look at how deep in the water the ship was. Depending on how deep it was, they would run down, place their buy and sell orders before anybody else, and make some money. Going on a little bit further, late 18th, early 19th century, telegraphy. So this is an example of Edison's stock ticker. So it's the universal stock ticker, patented in 1869. So basically, this gave people an ability to shrink the world. So similar to what the web has done for us today, the time and distance issues with communication were shrunk massively. It gave a nervous system, is how it was described by contemporaries in the day. Jumping to the 80s, and we see screens enter the world. So this is, everyone knows, Wall Street. Buzz is working away and looking at stock prices come through. So we move from the ticker onto screens and screen-based trading systems, screens becoming the norm, very busy trading floors. So where did it get to? Again, this will be familiar to a lot of people. Advent of the web. We go beyond equities. We go beyond stock pricing. Platforms built for every type of asset class, exchanges for everything. We go thick client-side applications. Streaming data the norm. Web push messaging makes giant leaps. Powerful but complicated applications. Ties in nicely to what was just spoken about. As open source tooling is developed, large communities connect to developers, again, utilizing the web to come together, people in this room, for collective innovation, and huge strides were made. This moves us on towards the web UI, on the thin side of things. HTML5, JavaScript, much more focus on user experience, workflows that we just talked about. Interoperation, bringing this together into a nicer way of doing things with a lighter front end. So, the interesting bit, where is it going? I'm focusing here on investment banking side, capital markets. That's the figure that I found for 2017 spend of investment banks on IT. The majority of this is going in places where you'd expect, on trade execution, order execution, trade processing, basic analytics. But there's some emerging trends that I want to talk about today. If we look at advanced analytics, so there's $2.5 billion spend. So that's the 2017 predicted figure, and the increase of 15% is actually the 2018 predicted increase. So this is looking at investment banks and what they're spending on. So that's a reasonable uptick. If we look at artificial intelligence, we're looking at a 14% uptick. Again, this is just using the data that they've got and putting more smarts behind it. Robotic process automation, Johnny 5. So this is about using robots and the bots to interact with APIs, with UIs, to do things better than humans do. So you can, the idea of RPA is that you can use business people to train these robots to interact directly with UIs, as I said, or even through APIs in order to get better. And then you can use things like artificial intelligence to make that smarter. The investment there is small in absolute terms now, but again, the trend is visible. Cloud computing, not an emerging technology. I hear people scream, but if you look at the figures and the trend for 2018, it's really interesting. So investment banks traditionally have been quite reticent to put these mission-critical industrial-style applications on the cloud, and these figures show that it's happening. And Adaptive have been involved in a number of real-time trading application deployments to the cloud recently, so we can vouch for this in real terms as well. So what does this mean? conscious I'm in a room with JavaScript, so it's front end. So it doesn't mean UIs are dead. It means people need richer UIs. What was just described, the visualizations that Chart.q are doing, the interoperation that OpenFin are allowing, that desktop layer, connecting things together. We have the data, now time to get the information. A figure I didn't put on the previous slide was that the big data spend by the investment banks is actually tapering off. It's expected to only be up 3% in 2018. So that tells me that people have the data. Now they need the advanced analytics, they need the artificial intelligence to wrap that up and give people decision support, make humans make smarter decisions by presenting this to them. And don't fear the bots, that's the final thing. They're not coming for our jobs just yet, but it's something that we can use to utilize, get those rudimentary tasks out of the way, give humans more information so they can make decisions smarter. Nice and short, that's it. Thank you.